Money Management Series. The Midland Public Library is thrilled to have partnered with 9 local libraries to offer a 2022 financial and legal talk series. For those of you who are unfamiliar or don't know me, my name is Jennifer Paquette, and I'm the Adult and Teen Services Coordinator here at the Midland Public Library. I'd like to begin with a land acknowledgement. Midland Public Library acknowledges and is thankful for the opportunity to work on the territory, the traditional territory of the Wendat, the Haudenosaunee, and the Anishinaabe, which includes the Chippewa, Ojibwa, Potawatomi, and Odawa people. We especially acknowledge the Chippewa of Bosley First Nation and Rama First Nation, who are the stewards of the lands in and around Midland. We also recognize the Métis nationhood currently represented in our community by the Georgian Bay Métis Council. We recognize and deeply respect their ongoing and historic connection to these lands. These connections need to be clearly and overtly articulated as part of our collective agreement to make the promise and the commitment to truth and reconciliation real in our community. It is important to remember that these sessions are about providing information, not legal advice. We'll be speaking about insurance in general terms, and please note that Jill and Ashley cannot provide you advice for a personal situation. So let me introduce this afternoon's special guests. Jill Charlebois-Richards is an experienced insurance problem solver and professional. She began her career with the Cooperators in 2001 as an associate insurance advisor, and in 2014 took over as insurance financial advisor and owner of Jill Charlebois-Richards Insurance and Financial Services, Inc. She is a licensed insurance representative and has also obtained her life license. Jill has over 20 years experience and specializes in life, critical illness, commercial insurance, disability insurance, and wealth and retirement planning. Ashley Denham has 9 years experience working with Cooperators and working with Jill, and she is our home, auto, farm, and boat expert. Thank you to both of you for joining us this afternoon. It's a pleasure to chat with you.
Thanks for having us.
All right, so with the introductions out of the way, let's hop right into some of our questions. And my first question is about some of the basics. What kinds of coverage might the average Canadian encounter in their lifetime?
Well, I think most people right off the bat, if you want to drive in Canada, in Ontario, you have to have liability insurance to be on the road. Whether or not you decide to actually physically cover your car, that's up to you, but it's mandatory that you have to have liability in order to be on the roads. Most people are also, if you have contents, you're starting to build a life, you have things that you like your computer and your furniture and your clothing. Even if you don't own a house, everybody needs what we either call tenants insurance or contents insurance. If you run a business or your dream is to be self-employed and have your own business, maybe you're a contractor or maybe you're going to be cutting hair, hairstylist, I guess, you need to have what's called commercial general liability insurance. And as much as people, I think, don't like to hear about it, everybody, if you have a family or you have things that you want to protect, to make sure that someone else isn't, at a financial loss if something occurred to you, heaven forbid, even life insurance.
Nice. So lots of different insurance options. Some like, as you mentioned, are required and some not so much. So let's circle back to those. So the insurances that are required for you, you'd mentioned car, so you need to have that liability insurance to drive in Ontario. What about tenants insurance or home insurance? Are they necessary? Are they required? Are they optional?
Sure. I'm going to let Ashley, who's my home expert, I think maybe speak to this one.
Sure. So when you're renting, most landlords will require tenant insurance. That includes, like Jill said, cover your contents. It also includes a liability insurance. When you own a home, most times home insurance is required. If you're mortgage free, technically you don't have to carry that home insurance, but that's a huge asset that you want to protect. So most people will choose to have the home insurance as well.
I think also to add, the most important thing about insurance is you have to remember insurance is there sometimes at the worst possible times of your life, but we are supposed to put you back into the same position you were in before a loss, no more or no less. So just like Ashley said, a house is usually a person's largest asset, right? Why would anyone leave that to chance that if it burned to the ground, you have nothing left and you would be solely responsible to fund the rebuild?
I'm totally a worrier, so the thought of not having insurance like freaks me
Oh
out.
my,
Freaks me out just to even hear about it.
we get to worry for everybody else. So I'm actually using my worrying skills for a good thing.
Good, good. There's a lot of terminology that's sort of thrown around insurance. So my next questions are sort of like, what are these things? And the first, let's start with a deductible. What is a deductible?
Sure. I'm going to let Ashley answer that because I think she's ready.
So the deductible is what you would pay in the event of a claim. So the standard deductible in a home is usually $1,000. So if you were to put in a claim for your home, that $1,000 comes off the claim amount. With auto insurance, usually you have your collision deductible and your comprehensive deductible. You're subject to your deductible when it's an at-fault claim. Say if you had an accident and you're not at fault, generally you're not responsible for that deductible amount. Another good point to remember is the higher your deductible, usually that means lower your premiums.
And I always thought, which is kind of silly, but before I ever got into insurance years ago, I thought that if you had a claim, I had to physically pay actually my insurer $1,000. Like if my deductible was $1,000, I thought I had to pay that out of my pocket cash, come up with that, and then they help me. But actually how it works is, let's pretend I have a tree, for example, that falls on my house and it does $5,000 damage to my roof. And I call my insurer and I say, hey, Ashley, I don't know what to do. I've got a tree on my roof. She's going to set me up with our adjusters. The adjuster is going to look at the amount of the damage, which in this case, for the example, we'll say 5,000, subtracting what your insurance company will do will subtract the deductible and pay the difference. So in that case, even though it's going to cost 5,000, they're going to pay me out $4,000 to fix the roof. And like Ashley said, the higher the deductible, the reason why you get such a break in premium is the insurance companies know that if you have a higher deductible, like if you have a house and instead of going with $1,000 deductible and you go with a $5,000 deductible, you're not as likely to put in a lot of little claims. So they reward you by giving you a lower premium.
So segueing then, how would you define a premium?
So the premium is the money that you pay for the policy.
And that premium is defined by the insurance company based upon, like, maybe we'll use houses or even cars. They look at, for vehicles, and Ashley can probably talk better about this, but all vehicles are rated by their safety factors. And they're also rated by, like they call it vehicle rate groups. And they look at how they respond in crashes, right? They look at what vehicles are more desirable for theft, for example. And so they come up with premiums based upon the risk exposure, in that case of the car. But in regards to houses, insurance is actually, believe it or not, pretty interesting nowadays, because with the onset of all the technology we have and computers, like when Ashley quotes a home policy, she has to go in and actually satellite map and pinpoint directly on the planet where that house is. And maybe, and sometimes it's not so great, maybe knowing all the things that all the information that insurance companies can use now, but we can tell right off the bat, oh, look at like so-and-so's house is on a floodplain. They're going to pay more money if they live in an area, for example, that has higher wind claims or greater water damage, or maybe they're in an area where they get broken into a lot. That person's going to pay a lot more premium. So the biggest thing about insurance, and I think Ashley will tell you the same thing, it's kind of, sometimes we get people that call and say, hey, why is my neighbor's policy so much cheaper than my coverage? Everything is defined, especially with houses. We have to actually come up with replacement costs on that structure. And that house, and maybe you both have a 1,200 square foot home, but maybe you have gone in and done a whole bunch of renovations and you have like a custom kitchen and you have a pool and you have all sorts of really customized items. Your replacement cost is going to be a lot higher if we have to rebuild your home compared to somebody whose house is still maybe hasn't had any repairs or updates for 30 years.
Right. Makes sense. So the premium is what we're paying. That's what our bills are, our monthly bills are or annual or every 6 months, the bills, that's what those are. And our deductibles are sort of what we plan to contribute to a claim. And like
one thing,
yeah, go ahead.
I could interrupt you for a second. I think we find it interesting too. We have a lot of people that will call and say, I don't understand this. Why did my premium go up this year at renewal? The thing about insurance is you pay that premium every year, but unfortunately, you're just renting the coverage for that period of time. It doesn't accumulate onto the policy. And the problem is, as time, and we especially saw it through COVID with the, like over the past 3 years, and I think Ashley can speak to this as well, the cost of material and labor has gone up so drastically that we're seeing like a huge rise in commercial buildings, like for construction, reconstruction. If you need a fridge replaced because it's been destroyed in a fire, even fridges, couches, everything has gone up. So the one thing that, you know, the viewers, to let them know, insurance unfortunately never stays the same. The premium is based upon what is happening in the world and in the area at the time for that 12-month or 6-month term that you've locked it in for.
I know all too well how much labor and materials have gone up with my renovation in the garage, but yes, no, it's a good point. A salient thing to consider, especially when it comes time for renewals and things like that. Are insurance costs subject to taxes? Are taxes charged on top of your premiums?
There is 8% tax on home insurance, no tax on auto, unless it's a seasonal vehicle. So like a snowmobile or an ATV, that kind of thing. Those are subject to tax. Regular auto is not, though.
Okay.
And no tax on commercial either. Did you say that?
No.
So no taxes on commercial. We don't, surprisingly enough, we don't make the premiums and we don't make the tax laws. If the government mandates that home insurance, like Ashley said, tenants insurance, any sort of like residential home policy, unfortunately, is subject to that 8% PSC.
Interesting. Do you know why?
Is it deemed a luxury? Like I really, honestly, I don't know.
Okay.
We've tried to fight it for years because, you know, like it's bad enough that you have to pay all this insurance and all your taxes and everything. You think that if you were trying to protect your house, for example, that would be a positive thing.
For sure.
But honestly, I'm sorry, I don't know the answer to that. Why?
No. Of course, and it was like a curveball for sure, but it just was interesting. Okay, so this is a situation that I was crowdsourcing some questions, and please feel free if you have questions for our guests, for Jill and for Ashley, please pop them down in the chat box. We would be happy to incorporate them into our conversation. As I was crowdsourcing some questions for this interview, I had come across a colleague of mine who had encountered a situation where it just so happened that our area was under a weather advisory at the exact moment that she was attempting to update her auto policy in this case, and was informed that by her insurance company that they couldn't update their policy while your residential area is under that weather advisory, which seems like, you know, maybe it was just the aligning of the planets in this case. But have you ever encountered that before? Something like that?
Yes, ma'am. See, what you have to kind of understand is when there's a major situation going on, whether it be like an ice storm or fires, was it Alberta that had all the fires a couple years of BC? When there's like major forest fires and it's imminent that it's coming towards a subdivision, no insurance company, unfortunately, it's going to let you call up and say, yeah, I'd like to put some insurance on my house now that I know it's going to burn down, right? And that's why insurance companies look at risk. And unfortunately, insurance is a business. They use the premiums. All premiums that the insurance companies collect are used to pay out any claims in any given year. So if, let's say we're all insured together by the same company, and Ashley and I and all of you, we're all paying our premiums every year. And if there is not enough money to pay out all the losses that year, guess what happens? Insurance companies come back to all of their clients, and that's where you see your premiums go up. So when you say it, you're absolutely right. With the way things are going with the world, we have major weather storms. If you look at like all the hurricane flooding that was recently down east, no insurance company is going to say, oh, okay, we know there's a massive flood coming. Let's all add in sewer backup and flood coverage on everybody's property now that you suddenly want it because of an issue. So unfortunately, that is correct. And we're seeing more and more of it, I think, with what unfortunately humans have done to our environment.
Yeah. It makes sense. It's just not something I had ever encountered before. Are there any other like little known facts that the average person might not know? Some sort of like scenarios like this one?
That's a good question. That's a like loaded question.
Yeah.
There's so many.
I suppose. Yes, you heard it here, folks, for sure. Well,
I don't think, I was just going to say, I don't think a lot of people realize that there are so many, what's the word, options for them. Like when it comes to insurance, like for example, yes, we live in Ontario. Most people don't realize you can buy an earthquake rider, for example, if you own a commercial building or if you own a house, right? And an earthquake rider, if you have that coverage, means if your house and your contents are destroyed or your building because of an earthquake, then we're going to pay the insurance company will pay to replace all the damage. And I don't think a lot of people, I think they think of California and all the massive quakes and everything, but we do have active fault lines in Ontario. And a lot of people I don't think realize, I think one of the things very interesting, if I have a house and I lived right on a body of water, and let's say Ashley lived across the road and she was way further back from a lake or something, right? Then if you think about it, because insurance is all based upon risk, right? If I'm right on top of the water, I have a much greater probability that my house is going to flood before Ashley's does, if she lives more inland, right? And I think when people look at buying houses, for example, you kind of have to take into a lot of things into consideration. Like, for example, did you know if you live out in the country, which is beautiful and lovely, and you have land around you, if you don't have a fire hydrant like you do when you live in town, your premium is going to be a lot different if you're living rurally. You're going to pay more money right off the bat because you don't have a fire hydrant right outside your door. So there's a lot of, like, when it comes to insurance, just like I think Ashley will tell you better than I, but when you look at a vehicle, Ashley will tell you some vehicles are way more expensive to insure than others. We know statistically, people are more likely to be able to walk away if you're in a truck or a higher vehicle, for example, right? If you got into a car accident, if two vehicles hit and one's a truck, most likely the person in the truck isn't going to be as damaged physically. I'm talking the person, maybe not the vehicles, but the person is the important part, right? So insurance is actually, believe it or not, pretty interesting stuff because there's so many things that come into play that I think a lot of people don't realize. So if you're looking at buying a car, call your insurance company, get quotes before you do it. You don't want to find out that all of a sudden, because that style of car was famous being in a movie like The Fast and the Furious, and now it's got massive claims records and not such a good safety record, that you're going to pay like $5,000 a year compared to $1,000 a year for another vehicle.
Insurance folks must be really like puzzle solvers, because I can imagine that no scenario is the same for you folks, right?
It never is.
It's always got its nuances and differences. We have
it keeps us on our toes.
Yes, I can only imagine, for sure. We've got a question from the chat box. It's from Cindy that says, what are the pros and cons to paying premiums yearly or monthly? And are there?
So that would probably be company specific. For cooperators, we don't have any service fees for paying monthly. So it's just your annual fee divided by 12. Or we offer the semi-annual, which is the annual fee divided by 2. So you pay every 6 months. Other companies may have service fees if you want to pay monthly instead of annually. So that would really be company specific. But with us, it's convenience and what works best for the client.
And honestly, like, I find it personally so much easier for me to pay a smaller amount every month than to have to come up with a lump for all the different insurances I currently own or have or need.
Right. So it's whatever works best for you, but in some cases you might be paying a little bit more in service fees. Thanks for that. I appreciate it. All right, dipping into auto insurance specifically, and again, folks, that chat box is open, so feel free to use it if you have other questions. What are some optional coverages available for auto insurance that folks might consider adding to their roster?
Okay, so like Jill touched on earlier, in Ontario, the liability is what's required by law. Minimum in Ontario is the 1 million. We usually suggest the 2 million liability because that limit is what's going to protect you in the event of a lawsuit. If your vehicle is being leased or financed, you are required to carry collision and comprehensive coverages. I mean, if your vehicle is 10, 15, 20 years old, you own it, you don't want to carry that coverage, that's totally up to you. The collision is what is going to cover you in the event of an accident and you're at fault. So if you don't carry that collision, we're not going to fix or replace the vehicle.
Depreciation, maybe?
Yeah, with new vehicles, we do have a depreciation reduction endorsement. So for the first 5 years that you own that vehicle, the value of the vehicle is protected. So if you're in an accident, vehicle is total loss, you're not going to get a depreciated value for it.
So if you have a new car, make sure you talk to your insurance company and find out about that depreciation endorsement.
I think one of the most important endorsements that you can add on to the auto policy is definitely accident protection or accident forgiveness, whichever your company refers to it as. With us, it is an endorsement that you add. You have to be licensed for at least 6 years and accident free, but it's going to protect your driving record in the event of an at-fault accident. So if you have an at-fault accident, you're not going to see an increase in your premiums from going, say, 10 years claims free to 0 years claims free. That can have a huge impact on premiums when you've been driving so long with no accidents.
And maybe just to touch on the fact how insurance companies look at your driving record. Basically, the way it works is every year when you start driving, and tell me if I'm incorrect here, Ashley, but every year that you start driving and you're accident free, you're building your driving record up. And then you're basically what they call driving record 7 means you've been driving 7 years without any accidents. You're going to get a much better premium or rate on your auto insurance than Jill, who just got her driver's license yesterday, right? Because basically what they're looking at is that every year your premium is going to get a little better the more you prove how good a driver you are and that you haven't had any claims, you haven't had any accidents. And so that's what Ashley's saying about that accident forgiveness endorsement. Talk to your insurance companies on that one, because if I have a perfect driving record and all of a sudden I make a stupid mistake and I bump into Ashley's car in the parking lot, there goes my driving record, perfect 7. I start back over at a 0 and my premium could pretty much triple.
So the liability insurance that's required, does that protect the person, and the collision that you were talking about protects the car? Do I understand that right? Okay, perfect.
Yeah.
Yeah, and so the depreciation, yes, because as soon as, and to go back to your depreciation, as soon as you drive it off the lot, it's cheaper than it was, 5 minutes earlier. And yes, that accident forgiveness for sure.
Another one that Ashley probably be better to speak to is accident benefits, correct?
Yeah.
Like in Ontario, you have a choice to pick. There's government mandated minimums, like standard coverages. But it would be very beneficial for anybody watching this. Make time to talk to your insurance company and say, what am I actually covered for? If I'm in an accident and I survive and I can't work and I am injured, what is my actual coverage? Because you can pay to increase those coverages. And Ashley's always talking to people. Our job is to educate you what's available. Whether or not you decide you want it, that's fine. It's just you need to know what your options are.
For sure. Can you talk a little bit about, we've touched on it a couple of times, but that explain coverage of the vehicle versus coverage of the driver. For example, if I lend my car to a friend and that friend gets in an accident, which of our insurance companies, who's responsible for that? Who are we appealing to?
You might not like the answer, but
I never lend my car to anybody, just saying.
So the thing to keep in mind is when you're lending your vehicle, you're essentially lending your insurance. So because you're the registered owner of the vehicle, say I borrow your car and I'm in an accident, the accident's going to go on my record as the driver, but you as a registered owner, that's going to go on your policy as well. So your policy will be affected by that accident. The other thing to keep in mind is, the driver that's borrowing your vehicle needs to carry a valid Ontario driver's license.
And it's your responsibility to make sure that their license isn't suspended or it's not, invalid or hasn't been renewed. Because if something happened, your insurance company could say they're driving without a valid license. That's illegal, no coverage.
Interesting. Yeah.
So no matter how much you like your friend, if something happens, you're out of the goodness of your heart, you're lending your vehicle. But just like Ashley said, if something happens to that, you're going to be the lucky one paying the repercussions in regards to premium, especially if you don't have that accident forgiveness endorsement.
And so this is a question kind of came out of folks living in larger city centers and that, but can you be insured as a driver without a car? Do you have to own a car in order to be covered as a driver? Like, let's say I live.
No, say like if you say, especially with younger drivers, if they live in the household with their parents, they would be listed as an occasional driver on that policy. With us, even if they don't live in the household, if they're driving that vehicle on a regular basis, then they should be listed as a driver, even if they're living at a different address, but they're using that vehicle on a regular basis. They don't have to own their own vehicle to be listed as a driver. They would have to own their own vehicle to have their own separate policy.
But it, like Ashley touched on, if they're using it on a regular basis, then you really need to let the insurance company know, because they could deny a claim and say, we did not know this person was a driver. You didn't tell us that so-and-so was taking the car to your nephew, your niece, your friend, whatever, that they've been taking the car 5 days a week. Like that has to be noted, or else you are taking the chance that your claim could be denied. Because it's illegal. You got to understand with insurance, it's a legal contract between the parties named and the insurance company. And if there are changes, and maybe it's in regards to your business insurance, you're making another product now, or your house insurance, you've added, I was going to say, you're now renting the house out and you haven't told us, that negates the original contract. You need to get permission so that the insurance company is aware of it, and they're going to okay it, and they're not going to deny your claim. Because you never want to be in a position where you found out, oh, I didn't know I couldn't rent my house out. I'm not living there anymore. It's burnt to the ground. And you're told it was never written as a rental property.
Right.
No coverage.
Okay. Whoa, so much to learn here, I tell you. We've got another question in the chat box from Marilyn that says, can you explain the policies for vehicles that are related to the driving speed and your driving habits? So we've heard of, like, put this little box in your car and it'll, track how fast you're going, how you're driving. Any experience with any of that?
Co-operators did used to have, with us, it was called the en route. So it did start as a device that was plugged into your vehicle, tracks like how hard you brake, how hard you accelerate, that kind of thing. It changed to an app-based program, and then they actually discontinued it. So clients were getting a discount based on their good driving habits versus not so great driving habits. But it's not something that we offer anymore. I'm not sure if other companies still do something like that.
It's worth looking into. I think all insurance companies are trying to come up with a better way of tracking it. Unfortunately, the plug-in models at certain points, you didn't know who was driving. First of all, right? Ashley could lend her car to me and I was a nightmare in it. And then she was having to pay higher premium. And then with the phone apps, a lot of problems if you didn't have like Wi-Fi, I guess, or internet. It didn't calculate anything. And I think what's going to happen, like I think you're going to see major changes with all companies, because all companies want to reward people for good behavior.
So on that same note, we're talking about so this was something that could discount your premiums because you're a good, safe driver. And again, it's interesting to know kind of what they were tracking, how hard you braked and how much you accelerated. What discounts are available to automobile owners that might save them a little bit on their coverage?
So the most common one, especially this time of year, would be the snow tire discount. I know a lot of companies do offer that. That's something that we have with the cooperators. There's also multi-vehicle discounts. So if you have more than one vehicle on a policy, there's another discount. Multi-product discounts is a big one. So if you insure your home and auto together, it's always great to bundle your policies together with one company, because then you're more likely to get more discounts.
Insurance companies try to reward basically loyalty. And it's proven that people that have multiple lines of business tend to look after things a little better. In regards to they take care of their properties, maybe they have less home claims or less auto claims, and so you get the most discounts. That would be one thing to tell all viewers. If you're going to have multiple insurance products, your best bet, like Ashley is saying, is to have them all through one company, because you're going to get the multi-vehicle, the home discounts for having the home and auto together. You're going to get rewarded for having it all in one place.
Okay.
We do also have like a driver's training discount. For younger drivers that have completed the driver's training course, mature driver discount, and retiree discounts as well. So there's a lot of different options there to try and save.
Excellent. And can you, my last question specific to auto insurance is, can you offer any tips to folks who have young drivers at home that they're considering adding to their policies?
So I know it's a huge thing when someone gets their license, and premiums can be quite high, but it's important as soon as that driver gets their G1 license
To notify.
to let your insurance company know. I know most people think they don't have to list them till they have their G2 and can drive on their own, but that G1, having them listed with the G1 gets them experience on the policy. With us, they're rated as a learner driver, so we don't actually charge premiums for G1 drivers. I can't speak for all companies on that, but that's how it works with us.
One thing to maybe keep in mind as well, if you have a G2 driver and you have them driving your vehicle and it's on your policy, if they get into an accident, it's affecting your policy.
Mhm.
Sometimes parents will actually go and take a separate policy out for their child. Actually does it all the time. And the child owns the policy itself. Their driving, affects their premium,
Yeah.
not the family's.
Interesting.
It's also, I think a big misconception is that people think once they hit 25, the rates are going to go down. That's not actually the case anymore, because it's based on your year's license, which Jill did touch on earlier. It's once you get your license and each year that passes, you have that driver's experience, then your rates are going to keep getting better. You stay like no convictions or tickets, accident free. You're just going to see those rates get better and better each year.
Because the newer the driver you are, and any accidents or any speeding tickets or anything, it's really going to affect your ability to get insurance. Like you may have to go to, I think, a higher risk market. If you're a new driver and you've had 5 tickets in an accident, you are considered a lot more riskier than a lot of companies want to look after. So there are high risk markets. The problem with that is you're going to pay a lot of money. If you are Evel Knievel or something of a race car driver on the road, you're going to pay a lot more money for your insurance. And I mean, for most people, insurance is not something they want to pay anyways, but why would you want to go from like $1,000 premium to like a $10,000 premium? I couldn't afford to drive if that was the case.
And so is it based on when you hit your G2, or is it the G license that it starts? Like,
so your year's license, actually you're credited. So when you go G1 to G2, no matter how many, like if you have 2-3 years between that, that's 1 year credit. And then it'll go from G2 onwards. It's each additional year. Yeah, so you start getting credit from the G2 date.
So from the G2 date, and then it's again, you know, not to do anything to do with age, years driving without an issue.
Exactly.
Right.
Exactly.
Excellent. I know I had a couple of colleagues whose kids have just gotten their Gs, and are like, hey,
Yeah.
you know, is it the G license that we get money off now, or has it worked? So that's great. And it's interesting too that you noted about getting, you know, having separate policies for young drivers on your vehicles. I think that if it's possible, it sounds like a great idea, because
and then they can also pay their own premiums that way.
Yeah.
Kids might not like that.
Hey, cost of doing business.
Quite appreciate it.
Yeah.
Excellent. That's great. Okay, now dipping into the home a little bit. So one of the questions that we've had here is, how far does the definition of home stretch? Does it include a garage that is a separate building, or a shed, or even in the backyard? You know, maybe I've got my bike or something, you know, stored in the backyard and it gets stolen. How far does home stretch?
All home policies are basically broken down into like the main home structure. And then we have what's called detached structures. So if you had a house, let's say where the garage is attached, that's all considered one building. Like that's the house, if the garage is built in or attached to it. If you have a detached garage, or you have like a man shed or a she shed in the backyard, or let's say you have a pool house with the pump and all that, and you have a lovely gazebo, and you got fencing and everything, all those things are considered to be detached structures. So the way insurance works when it comes to home insurance, we take, like, for example, if I'm insuring your house for $500,000, we automatically give you a percentage of, like, right off the building value towards any detached structure on your property. If that coverage amount, if you had these super amazing detached structures and they were just, it was so elaborate. They're not your typical garage. There was like, I don't know, a party room and big screen TVs, and it looked like a beautiful lounge or something. If you needed more coverage, insurance companies can add additional coverage for detached structures. But generally, that stuff's going to fall underneath the home policy automatically. You mentioned a bicycle or something in the backyard. That falls underneath your personal contents under the home policy.
Okay. So if I own a home, do I need to have contents insurance and home insurance, or?
It's all part of the parcel.
Okay.
And usually insurance companies, depending upon the type of coverage, like we have what's called, if one of our policies, the best coverage you can get, we give you the same amount as whatever the home is insured, to up to that amount for your contents. Some policies will give you like a percentage of either 65 or 75% of whatever the building is insured for towards those contents. Anytime, like, interesting point that maybe viewers should realize, anytime somebody has an item that the average person may not have in their home, like let's say I had a $40,000 antique Gibson guitar in my house, right? That is not something the average person generally has. Or let's say an art collection, or I was going to, sometimes people have elaborate collections of baseball cards worth like a small fortune. Anything that's really unusual, you want to like talk to your insurance company and see perhaps about adding a rider. Maybe it's an expensive piece of jewelry, a diamond that's very special. You can add riders to policies to cover items that you want to make sure, no matter what happens, that you get that item back.
Good point. We had a good question in the chat from Marilyn that says, does the type of roof affect the home policy? For example, a metal roof versus shingles?
Unfortunately, it can. And I think Ashley can talk about this as well, but it used to be statistically that unfortunately metal roofs are wonderful and like they're less likely to be, blown off in the event of a windstorm. You're not going to lose them, hopefully, like we used to do with shingles and everything. But unfortunately, in the event of fires, they kind of hold the heat in. And a fire, whereas, if it's a frame roof and it's got shingles, sometimes part of that roof will open up and some of the flames can go outwards, right? And doesn't create the same amount of heat or damage. So yes, it's possible, depending upon the insurance company, you might see a higher premium for having, even though it's safer and it's probably going to be better, like with snow load, it's probably not going to collapse the same as like a wood frame with asphalt roof. Yeah, you could see potentially. It's something to definitely talk to your insurance company about.
Thanks for that question, Marilyn. Well, what optional home coverages might folks in Simcoe County consider? We talked a little bit earlier about the earthquake rider.
I would highly recommend anybody that, no matter where you live, I think Ashley will tell you, we get told probably 15, 20 times a day, I've never had water problem. It's not an issue. I live on sand. I live on a hill. It's gravity fed. There's no way sewage or water is coming into my basement. Well, I think I speak for both of us to tell you never say never, because you wouldn't believe the claims that we have seen. And in regards to sewage, trust me on this, because my bathroom in my office here just backed up about an hour before this whole presentation. And trust me, you don't want to be dealing with sewage or water coming in from, from the sewer. So basically, I would recommend anybody who has any sort of finished, even if it's not a completely finished basement, the average like cleanup, let's say you had a 1,200 square foot house and it's not finished, you have stuff that you're just storing down there. So it's concrete floor maybe and drywall, it's just drywall, eventually you're gonna finish it. If sewage or water comes in, the average like cleanup and sterilization of that is probably around $10,000 right now. And so even if you're not ripping everything out and you're not, 4 feet of sewage, it's not cheap to sterilize, especially with water, and you need to make sure it's taken care of, because if mold occurs, no insurance company will cover mold. So if suddenly, you haven't taken care of a water issue and there's mold everywhere, insurance companies do not cover it.
Interesting. Another question from the chat box is it smarter to own your hot water tank versus renting? From an insurance
it doesn't really affect, I think, from the point of insurance, they kind of look at, most insurance companies look where those hot water tanks are, right? Generally, they're in the lowest level of the house, but some of the newer builds, just like washing machines, interesting, maybe not so interesting, but interesting fact for us, if you have a washing machine, for example, that's on the top floor of your house, and you have like a 3-floor, two levels in a basement, and your washing machine's upstairs by your bedroom, which is super convenient. But what happens if that hose becomes detached during a cycle and you're outside in the yard or whatever, and you don't notice it, and water is running down 2.5 floors into your basement? It does so much damage. Insurance companies generally charge more premium if your hot water tanks or if your washing machines are in areas higher that can flood into other areas.
Interesting.
So good question. I think honestly, it doesn't really matter in the grand scheme of things if you own it or if you don't own it. It's more of where it's located.
Yeah, I think it's important to add that we're not a warranty. So whether you own that water heater or you're renting it, if something happens to the water heater, that's not an insurance claim to fix it.
And Ashley makes a really good point that I don't think we mentioned. Sadly, and I know people say, well, what do I pay premium for? But insurance is not a warranty on every single thing that can possibly go wrong. An insurance policy is based, whether it be auto insurance or home insurance or commercial insurance, to cover what's called the listed perils on the policy. So when you decide, and for example, if you're looking at home insurance, you want to see what your coverages are. If you're going for the basic policy, you're getting basic coverage. And yes, the premium may be cheaper, but in the long run, you're not going to be so happy if something occurs and you could have had that coverage.
Okay, thanks for sharing that. So like we talked about with the auto insurance, are there any additional features of the home that will offer homeowners a discount on their home insurance? Or on the flip side? Well, let's go with discounts first, and then we'll talk a little bit about things might raise your premium, but like discounts first. Are there
Well, and like Ashley said, multi-product. So if you have home and auto together, your insurance company most likely will give you a discount for that. We have like a non-smoker discount. So if your household is not smoking inside the household, you can get a discount for that. There's what we call a mortgage-free discount. I guess it's thought, I always thought people with mortgages, we need the discounts more than somebody that maybe doesn't. But it's thought that I guess if you're mortgage-free, you're most likely going to be home more often, and you're going to be able to prevent more claims from happening. So insurance companies generally give a discount to people who don't have a mortgage, just because of that claims history. What else have I forgotten?
First home.
Oh, we have a first home discount. Ashley is absolutely right. So basically, insurance companies can reward you for purchasing your first house to try to help you out a little bit. We also have, if you, for example, have a burglar, a monitored alarm system is going to be the kicker. So my dog barking every time somebody walks by the house does not count. It has to be a monitored system where an actual alarm company is 24 hours a day ready to call the police for me, basically. But that's another discount on home insurance. What else? If I missed anything? Retiree discount. So there's actually a retiree discount as well. If you're retired, again, I think the premise being that it's thought that you're home more, you're more conscientious because you're able to keep things up to date and look after any issues before they turn into a major issue.
Interesting. Okay, let's chat about the flip side of that. Are there things that are in the home or that will cause folks' premiums to rise?
Yes, there is. Would you like to handle that one?
So wood burning fireplaces, if you have oil heat, there is a surcharge for those things because they are a higher risk. If you have a pool, you do pay a little bit more for the liability portion of that.
I think we mentioned if you live on the water or near a body of water, like a river or something that we know is going to flood, you're going to pay more money, unfortunately, for being so close to a water source.
To have that flood coverage.
Interesting. Neat. Now I'm starting to think like I wish I had this session before I started my renovation because of my washing machine is on the second floor. No, life changes quickly. COVID taught us that for sure, if we didn't already know it. And folks can, relationships can often change. Either getting into a common law relationship or outside of one, becoming widowed, or families, are banding together and moving together. So one of the questions I got was like, in a life situation that sees you adding or removing folks from the title of your home, so going from a solo ownership to a joint ownership or vice versa, do you need to inform your insurance company of those changes?
Absolutely. And going back to the same thing, it's a legal contract, a contract that was written in those names, right? So if suddenly maybe perhaps somebody's going through a divorce or a separation, and one's going to keep the house. In some cases, we actually have to cancel that policy and rewrite the policy with the sole owner as the insured. Because the agreement, even with auto insurance, is between that person and the insurance company. You mentioned with common law, a lot of people move in together, start a life together. You really do need to let your insurance company know that somebody's now in the household. Because even though they may have their own auto policy, for example, it still needs to be noted, because now if I have somebody moving in with me, they potentially have access to my keys and could take my car at any time. Even if I'm saying, oh no, they're not going to drive my car. If they live in the household, it's pretty easy to take my keys out of my purse or something if they really want to, right?
Right. Thanks for that. We have another question from the chat box that says, what is the change in home policies if you travel and are away from home for extended periods? So how does home insurance work with snowbirds?
So we actually see that a lot in this area. With us, especially during the winter season, we need to know that someone reliable is checking on the home every other day, keeping the walkway and the driveway clear of snow so it doesn't look like nobody's home. Make sure there's no buildup of newspapers and that kind of thing, going in and making sure the heat is still working and the water is not running, that kind of thing. Somebody responsible needs to be checking on that home every other day.
If you leave a house, like even with a snowboard, and maybe they're gone for several months, and you don't tell your insurance company and you don't have anybody checking it, it could be deemed basically as being vacant. And an insurance company could, in fact, if a pipe bursts and nobody finds it for 3 months, and the building's basically completely underwater and is basically a tear down, you could have a problem because you did not tell the insurance company that nobody is there, and you didn't follow the rules that somebody had to be watching it. They could deny the claim completely. So you're always better to have a conversation, find an insurer that you trust, that is willing to answer your questions, that never makes you feel silly for asking any question, because you want to always make sure that you are covered no matter what.
Or, get some fish or some plants that somebody needs to look after so that you don't have somebody coming in all the time.
I think Ashley has to leave for an appointment, unfortunately, in a minute. So if anybody has any auto questions or house questions for Ashley, I was very lucky that she could join me for as long as she did, but she has to leave for another appointment. So I can still answer whatever, but.
One last question before you leave, Ashley. How often should you review your home and auto policies?
I mean, it depends on the client. I have clients that like to review their policies with me every year. Generally, every 2 to 3 years, I would say set up an appointment with your advisor to go through those policies. But on a personal level, when you get your renewals, definitely take the time to sit down and go through it and compare last year to this year. See if there's any updates. Like if we change any policy wordings or there's a new coverage available to you, we send out that information. So it's definitely important to read through your renewal documents, see if anything has changed, if there's any new discounts you may qualify for, or any new coverages that you may feel that you should have on your policy. And we send out our renewals about a month ahead, so it gives you plenty of time to review that. It's also on the onus of the client to make sure that the registered owner on the vehicles is correct, because that's what's going to show on the pink slip. Maybe you have a driver that's missing from the policy that you're thinking, oh, they just got their license, I haven't added them. It's really important to review those renewals when you get them and to see if you need to make any changes or updates.
And life changes, your situation changes constantly. So I mean, like I would say, just like Ashley, at least every time you get that renewal, you want to just say, hey, can you tell me, are there any new coverages I'm missing? Are my coverages, this is now happening, what do I do in this scenario? You may find that we're not just out to gouge for premium as an insurance company. You may actually get discounts that you didn't even know about. But it really, the onus falls on the client to make sure that all the information that is on that policy is accurate. And the client is the only one to be able to say, hey, wait a second, I don't have that boat anymore, or there's no longer a mortgage on the property, or, Jimmy got his license. That's not information that no matter how well we try to know you, I can't keep up if you don't tell me.
For sure. Well, just to wrap things up, I'd like to thank both of you for spending your time with us this afternoon. It was a pleasure chatting with you, and thank you to our audience folks for joining us as well. We've learned that even though many of us has probably been dealing with or paying for insurance for years and years, it's always the game changing, and there's still more to learn. Folks can find out more information about our upcoming events in the Simcoe Money Management Series on our event calendar at midlandlibrary.com or with your local libraries. Thank you again, Jill and Ashley. It was a pleasure
Thank you
chatting
for having us.
with you. Take care and have a great afternoon, everyone.